Hello and welcome. I'm Clarissa and I'm thrilled to have you join us today for an incredibly important and exciting journey into home ownership. If you've ever dreamed of owning your own home but felt overwhelmed by the daunting task of saving for your down payment, you're in the right place. Today, we're diving deep into the world of down payment assistance programs, or DPAPs, to help you possibly unlock the door to your new home faster than you ever thought possible. In this comprehensive webinar, we're not just scratching the surface. We're taking you step by step through everything you need to know about buying your first home, from understanding the home buying process to exploring the powerful benefits of down payment assistance programs and how you can qualify for them. We're here to break down the barriers and provide you with tools and knowledge to make home ownership a reality. Now, let me give you a sneak peek of what we'll cover today. We'll start with the fundamental steps of buying a home, giving you a clear roadmap from start to finish. Then we'll delve into the mortgage approval process and also focus on demystifying down payment assistance programs, what they are, how they work, and most importantly, how they can make homeownership attainable without a massive down payment. But why is owning a home so significant? Let's take a moment to talk about that. Homeownership is more than just having a place to call your own. It provides you with stability and a sense of belonging. It's an investment in your future, building equity over time, and creating a solid financial foundation. Plus, owning a home can offer tax benefits that renting simply can't match. Imagine having a space that reflects your personality and where you can build lasting memories with your loved ones. Throughout this webinar, our goal is to make this process as clear and straightforward as possible. We're here to provide you with expert insights, answer your questions, and help you navigate the path to home ownership with confidence. Let's get started. Welcome to our webinar, where we'll walk you through the essential steps to buying your first home. In this section, we're focusing on assessing your readiness, a crucial step that sets the foundation for a smooth and successful home buying experience. Let's start with a financial health check. Before you even start looking at properties, it's important to get a clear picture of your current financial situation. This means taking a close look at 3 key areas: your credit score, income, and debts. Credit score. Your credit score plays a significant role in determining your mortgage eligibility and the interest rates you'll be offered. Generally, a higher credit score means better mortgage terms. If your score isn't where you'd like it to be, consider taking steps to improve it, like paying down debts or correcting any inaccuracies on your credit report. 2. Income. Next, let's talk about your income. Lenders will assess your ability to repay the mortgage based on your income. It's not just about your salary. Other sources of income like bonuses or rental income can also be considered. Make sure you have a clear understanding of your total income and how it aligns with your home buying budget. 3. Debts. Finally, your current debts are a crucial factor. Lenders will look at your debt to income ratio to evaluate your financial health. This ratio compares your monthly debt payments to your gross monthly income. The lower your ratio, the better. Aim to reduce or manage your existing debts before applying for a mortgage to improve your chances of approval. Now, let's shift gears to personal readiness. This is about evaluating whether homeownership fits into your long-term goals and lifestyle. 1. Long-term goals. Owning a home is a significant commitment. Consider how this decision aligns with your long-term goals. Are you planning to stay in the area for several years? Do you have career plans that might affect your location? A home purchase is best suited for those who see themselves in one place for the foreseeable future. 2. Lifestyle considerations. Think about your lifestyle and how a new home will fit into it. Do you need extra space for a growing family, or are you looking for a low-maintenance property? Consider your hobbies, commute, and other lifestyle factors. A home should complement your daily life and support your personal and professional aspirations. Assessing your readiness involves both a financial and personal evaluation. By taking the time to carefully consider these factors, you'll be better prepared to make informed decisions throughout the home buying process. Setting your budget is an essential part of the home buying process. This is where we take all the financial information we've gathered and turn it into a practical plan for buying your home. How do you determine what you can afford? To start, you need to establish how much you can comfortably spend on a home. This involves looking at your income, debts, and overall financial situation to figure out your budget for a home. A good rule of thumb is that your monthly mortgage payment should not exceed 28 to 30% of your gross monthly income. Additionally, your total monthly debts, including the mortgage, should generally be no more than 36 to 43% of your gross income. However, there are cases where borrowers with higher debt-to-income ratios, closer to 50%, can still qualify for a mortgage. This is often referred to as your debt-to-income ratio. Let's break this down with a practical example. Let's say your gross monthly income is $5,000 and your total monthly debts amount to $2,000, giving you a debt-to-income ratio of 40%. Putting it all together, here's the breakdown. 1. Mortgage payment, $1,500 per month. 2. Property taxes, $200 per month. 3. Homeowners insurance, $50 per month. 4. Monthly car payment and credit card payments, $250 per month. Total estimated monthly housing costs, $2,000. Setting your budget is all about understanding your financial boundaries and planning accordingly. By carefully calculating your monthly costs and incorporating all aspects of homeownership, you can ensure that you're making a well-informed decision and that your home fits comfortably within your budget. In our next section, we'll explore how to get pre-approved for a mortgage and why it's such an important step in the home buying process. But for now, take some time to review your budget and make sure you're clear on what you can afford. Getting pre-approved for a mortgage. Now that you've assessed your readiness and set your budget, we're moving on to a critical step in the home buying process, getting pre-approved for a mortgage. This step is essential for setting yourself up for success and making your home buying journey smoother and more efficient. 1. The pre-approval process and its importance. So what exactly is a mortgage pre-approval? Simply put, it's a formal evaluation by a lender to determine how much they are willing to lend you based on your financial situation. This process involves a thorough review of your finances and provides you with a conditional commitment for a loan amount. Here's why a pre-approval is so important. Strengthens your offer. Being pre-approved shows sellers that you're a serious buyer with the financial backing to make a purchase. It can give you a competitive edge, especially in a hot housing market. Clarifies your budget. Pre-approval gives you a clear idea of how much you can borrow, helping you narrow down your home search to properties within your budget. Speeds up the process. Having a pre-approval in hand can streamline the mortgage process once you find a home, as much of the preliminary work is already done. To get pre-approved, you'll need to provide a range of documents and information to your lender. Here's a list of what's typically required. Proof of income. This includes recent pay stubs, W-2 forms, and possibly tax returns. Lenders need to verify your income to assess your ability to repay the mortgage. Credit history. The lender will pull your credit report to check your credit score and review your credit history. This helps them gauge your credit worthiness and the risks associated with lending to you. Proof of assets. You'll need to provide statements from your bank accounts, retirement accounts, and other assets. This helps the lender verify that you have sufficient funds for the down payment and reserves. Identification. A valid ID, such as a driver's license or passport, will be needed to verify your identity. Employment verification. Sometimes lenders require verification of your employment status directly from your employer to ensure your job stability. How the pre-approval process works. Here's a step-by-step overview. 1. Submit an application. Start by completing a mortgage application. This can often be done online or in person. 2. Provide documentation. Submit the required documents and information as listed above. 3. Credit check. The lender will perform a credit check to assess your credit worthiness. 4. Review and decision. The lender reviews your financial information and makes a decision on the pre-approval amount. 5. Receive pre-approval letter. If approved, you'll receive a pre-approval letter stating the loan amount you're eligible for. This letter is an important document to have when making an offer on a home. Getting pre-approved is a crucial step in the home buying process. It not only helps you understand your borrowing power, but also strengthens your position as a buyer. By having your pre-approval in hand, you'll be better prepared to make an offer on the home you want and move quickly when you find it. If you'd like to start the pre-approval process to see how much you might be pre-approved for, click the link that's popping up on your screen now. We'll also provide the link at the end of the webinar for your convenience. Now that you've assessed your readiness, set your budget, and understand the pre-approval for a mortgage process, it's time to discuss a key player in your home buying journey, finding the right real estate agent. 1. The role of an agent in the home buying process. A real estate agent is your guide and advocate throughout the home buying process. Here's how they can help. Market expertise. Agents have a deep understanding of the local real estate market, including current trends, neighborhood details, and property values. They can provide valuable insights to help you find the right home in your desired area. Property search. They'll help you identify properties that match your criteria and preferences, saving you time and effort in your search. Negotiation. Skilled agents are adept negotiators who can advocate on your behalf to get the best possible deal. They'll handle the back and forth negotiations with sellers and work to secure favorable terms for you. Paperwork and process. The home buying process involves a lot of paperwork and legalities. An agent will guide you through these complexities, ensuring that all forms and contracts are correctly completed and submitted. Coordination. They coordinate with other professionals involved in the process, such as home inspectors, appraisers, and lenders, to keep everything on track and ensure a smooth transaction. Tips for selecting the right agent. Choosing the right real estate agent is crucial for a successful home buying experience. Here are some tips to help you find the best fit for your needs. Experience and specialization. Look for an agent who has experience working with first-time home buyers and who specializes in the type of property and area you're interested in. An agent with a track record of successful transactions in your target market will be more effective. Reputation and reviews. Research potential agents by checking online reviews and asking for recommendations from friends, family, or colleagues. Positive feedback and good reputation are strong indicators of a reliable agent. Communication skills. Effective communication is key in real estate. Choose an agent who listens to your needs, responds promptly to your inquiries, and keeps you informed throughout the process. Local knowledge. An agent with local knowledge can offer insights into neighborhoods, schools, amenities, and market conditions. Their familiarity with the area can be a huge advantage in finding the right home. Compatibility. Finally, ensure that you feel comfortable working with the agent. A good working relationship is essential for a smooth and enjoyable home buying experience. Trust your instincts and choose someone you feel you can collaborate with effectively. Finding the right real estate agent can make a world of difference in your home buying journey. They're your partner in this process, helping you navigate the market, negotiate terms, and manage the paperwork. Take the time to find an agent who aligns with your needs and preferences to ensure a successful and stress-free experience. Now that you've set your budget and have been pre-approved for a mortgage, it's time to move on to one of the most exciting parts of the home buying journey, house hunting and making an offer. In this section, we'll cover what you look for in a property and how to make a competitive offer that increases your chances of securing your dream home. What to look for in a property. When it comes to house hunting, finding the right property involves more than just falling in love with the home's appearance. There are several key factors to consider to ensure that the property meets your needs both now and in the future. 1. Location. The old saying, location, 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 still rings true today. Consider the neighborhood's proximity to work, schools, public transportation, and amenities like grocery stores, parks, and restaurants. Look into the safety of the area and future development plans that might impact your property values. A great location can significantly enhance your quality of life and boost your home's long-term value. 2. Condition. Pay close attention to the condition of the home. Older homes might have charm, but they can also come with hidden issues. Consider getting a home inspection to uncover any potential problems with the roof, foundation, plumbing, or electrical systems. The condition of the home will not only affect your comfort, but also the costs of maintenance and repairs. 3. Size and layout. Think about the size of the home and its layout in terms of your current and future needs. Are there enough bedrooms and bathrooms for your family? Is the kitchen spacious enough? Consider how the flow of the home works for your lifestyle. Open floor plans, for example, are great for entertaining, while more compartmentalized layouts may offer more privacy. 4. Future potential. Look at the long-term potential of the property. Is there room for future expansions or renovations? Can you see yourself living in this home for years to come? Considering the future can help ensure that the property will continue to meet your needs as they evolve over time. When viewing homes, it's helpful to bring a checklist of your must-haves and deal breakers. This will help you stay focused on what's most important and avoid being swayed by superficial features. Take notes and photos during your visits, and don't hesitate to revisit properties that you're seriously considering. We've included a link for you to download a sample homebuyers checklist. This checklist will guide you on what to look for during your search and help you make more informed decisions. How to make a competitive offer. Once you've found a home that checks all your boxes, the next step is making an offer. In a competitive market, this can be a bit daunting, but with the right strategy, you can increase your chances of having your offer accepted. 1. Market analysis. Before making an offer, your real estate agent will conduct a market analysis to help you determine a fair and competitive offer price. This analysis compares similar properties in the area, often called comps, to assess the home's market value. Understanding the local market conditions, whether it's a buyer's or seller's market, will also influence your offer strategy. 2. Offer price. Your offer price is one of the most critical elements. While you want to make a competitive offer, it's essential to stay within your budget. In a hot market, you may need to offer more than asking price to stand out, but your agent will guide you on how much extra to consider. In a slower market, you might have more room to negotiate. 3. Contingencies. Contingencies are conditions that must be met for the sale to proceed, such as financing, home inspection, or the sale of your current home. While contingencies protect your interests in a competitive situation, reducing the number of contingencies can make your offer more attractive to the seller. However, this should be done carefully to avoid unnecessary risks. For a deeper dive into contingencies, we've included a link to an article on your screen. 4. Personal touch. Sometimes adding a personal touch to your offer can make a difference. Writing a heartfelt letter to your seller explaining why you love the home and how you envision living there can create a connection and make your offer stand out. This is particularly effective when sellers have an emotional attachment to the property. After submitting your offer, the seller may accept, reject, or counter it. Be prepared for some back and forth negotiations. Your agent will be your advocate, helping you navigate these discussions and adjust your offer as needed. Once both parties agree, the offer becomes a legally binding contract and you'll move forward with the closing process. With the right approach, you can increase your chances of securing the home you want at a price you can afford. 6. Closing the deal. You've successfully navigated through the home buying process. From finding your dream home to having your offer accepted. Congratulations! Now you're at the final stage, closing the deal. In this section, we'll help you understand the closing costs and what to expect on closing day, so you can approach this milestone with confidence. Understanding closing costs. Before you can officially take ownership of your new home, there are several fees and expenses known as closing costs that need to be paid. These costs are an essential part of finalizing your purchase, and they can sometimes be a significant financial consideration. But don't worry, down payment assistance programs, DPAPs, can often help cover some of these expenses, easing the financial burden. 1. Common closing costs. Let's break down some of the most common closing costs you might encounter. Loan origination fees. These are fees charged by your lender for processing your loan, typically ranging from 0.5% to 1% of the loan amount. Appraisal fee. This covers the cost of having the home appraised to determine its market value, usually between $300 and $500. Title insurance. This insurance protects you and the lender from any legal issues related to property ownership, usually costing around 0.5 to 1% of the purchase price. Home inspection fee. Though often paid early in the process, this fee, typically ranging from $300 to $500, ensures the home is in good condition. Property taxes. You'll need to pay prorated property taxes, homeowner's insurance. Most lenders require you to pay the first year's premium at closing. Attorney fees. In some states, you may need to hire an attorney to handle the closing, with fees varying accordingly. Recording fees. Charged by the local government to record the sale and transfer of the property, typically ranging from $50 to $150. Prepaid interest. Depending on your closing date, you may need to pay interest on your loan for the days between the closing and your first mortgage payment. If you'd like to learn more about closing costs, there's a link to a helpful article on your screen. 2. How DPAP can help. One of the significant benefits of down payment assistance programs is that they often cover more than just the down payment. Many DPAPs also offer grants or forgivable loans to help you with closing costs. This support can make a substantial difference, especially if your budget is tight. By leveraging DPAPs, you can reduce the out-of-pocket expenses you need to cover at closing, making homeownership more affordable and accessible. 3. Total cost estimation. Typically, closing costs range from 2% to 5% of the home's purchase price. For instance, if you're buying a $300,000 home, you might expect to pay between $6,000 and $15,000 in closing costs. However, with the assistance of a DPAP, a portion of these costs could be covered, potentially saving you thousands of dollars. During the application process, your lender will provide a loan estimate that outlines potential closing costs. A few days before closing, you'll receive a closing disclosure that details the exact costs, including any contributions from the down payment assistance program, so you'll know precisely what to expect. By understanding these costs and knowing how a down payment assistance program can help you, you can better prepare for this final financial step in your home buying journey. What to expect on closing day. Closing day is the moment when all your efforts pay off and you officially become a homeowner. It's an exciting day, but it's important to know what to expect so everything goes smoothly. Let's walk through what happens on closing day with some added insights on how DPAP can impact the process. 1. Review documents. On closing day, you'll meet with your closing agent, who could be a title company representative, an attorney, or an escrow officer, the seller, and possibly your real estate agent. The first step is to carefully review all the closing documents. These documents include the closing disclosure, loan agreement, and the deed. Make sure to check how many down payment assistance contributions are applied to your closing costs. Take your time to read everything thoroughly and don't hesitate to ask questions if something isn't clear. 2. Sign papers. After reviewing the documents, it's time to sign. This will include the mortgage note, your promise to repay the loan, the deed of trust, which secures the mortgage against the property, and other legal agreements. This process can take some time, so be patient and ensure you understand each document before signing. Remember, the support from DPAP will already be factored in, reducing your out-of-pocket expenses at this stage. 3. Final walkthrough. Before heading to the closing, you'll typically do a final walkthrough of the property to ensure it's in the same condition as when you made the offer. This is your last chance to check that any agreed upon repairs have been made and that the home is ready for you to move in. 4. Fund transfer and key exchange. After all documents are signed, you'll provide the remaining funds for the down payment and closing costs, usually via a wire transfer or cashier's check. Thanks to the down payment assistance program, some of these costs may already be covered, significantly reducing the amount you need to pay. Once the transaction is complete, you'll receive the keys to your new home, an exciting moment indeed. 5. Recording the sale. The final step is the official recording of the sale with the local government, which makes you the legal owner of the property. This step is usually handled by the closing agent, and you'll receive a copy of the recorded deed in the mail a few weeks after closing. Closing day is the culmination of all your hard work, and with the support of the down payment assistance program, it can also be more financially manageable. By being prepared and knowing what to expect, you can ensure that it's a smooth and a joyful experience. Congratulations, you're now a homeowner. Let's start by understanding what the Down Payment Assistance Program, or DPAP, is and how it can help you on your journey to homeownership. A DPAP program is designed to provide financial assistance to homebuyers, particularly those who might struggle to save enough for a down payment. This assistance can come in several forms, such as grants, forgivable loans, or deferred payment loans. The main goal of a DPAP is to make home ownership more accessible by reducing the upfront costs associated with buying a home. DPAPs typically work by offering a specific percentage of the home's purchase price or a fixed dollar amount that can be applied towards your down payment, and in some cases, closing costs. This assistance is often provided through local, state, or national programs, and it can be paired with various types of mortgage loans such as FHA, VA, USDA, and conventional loans. Now, let's break down the key benefits of DPAPs. Benefits of DPAPs. First, the most obvious benefit is the financial support itself. By reducing the amount you need to save for a down payment, a DPAP can help you get into a home sooner than you might have thought possible. Second, many DPAPs are structured as forgivable loans. This means that if you meet certain conditions, such as living in the home for a specified period, usually between 5 to 10 years, the loan doesn't have to be repaid. It essentially turns into a grant, which can be a significant financial advantage. Third, some DPAPs offer deferred payment loans. In these cases, you don't have to make any payments on the assistance amount until you sell the home, refinance the mortgage, or pay off the loan. This can make home ownership more affordable in the short time. It's important to note that the specific terms of a DPAP can vary widely depending on the program. Some DPAPs may require monthly payments, while others might not. The key is to understand the terms of the DPAP you're considering so you know whether the assistance is forgivable, if there are any repayment obligations, and what conditions need to be met. Eligibility requirements. Let's move on to who qualifies for these programs. Both local and national DPAPs have specific eligibility requirements. Income limits. For local programs in Shelby and Tipton counties, the income limits typically target households earning up to 80% of the area median income, or AMI. On the national level, income limits can vary more broadly. The National Homebuyers Fund, or NHF, allows for income levels up to 120% of AMI. Similarly, the Chenoa Fund is focused on borrowers who earn up to 135% of AMI. Credit score. When it comes to credit scores, local programs usually require a minimum score ranging from 620 to 680, depending on the specific program. For example, the NHF Platinum program requires a minimum score of 640, while the Chenoa Fund is accessible to borrowers with a score starting at 620. First-time homebuyers. Many local programs prioritize first-time homebuyers, but some are also available to those who have owned homes before. Debt-to-income ratio. Local programs typically allow debt-to-income or DTI ratios up to 50%, although there are lower thresholds for certain property types. National programs align their DTI requirements with the standards set by the loan types they support, such as FHA or VA loans. Assistance amounts. Now, let's talk about the financial assistance these programs offer. Local programs generally provide assistance ranging from $5,000 to $15,000 depending on the specific program and the available funding. For example, the Memphis Housing Authority's DPA program can offer up to 10% of the sales price up to $25,000. National programs also offer substantial assistance. The NHF Platinum program can provide up to 5% of the loan amount, which could exceed $25,000, depending on the home's purchase price. The Chenoa Fund also offers between 3.5 to 5% of the purchase price, which can be significant for higher-priced homes. Property requirements. Next, let's look at the types of properties that are eligible for these programs. For local programs, the property must be your primary residence. This includes single-family homes, townhomes, condos, and in some cases, manufactured homes. National programs have similar requirements. They are also designed for primary residences and typically support properties that are eligible under FHA, VA, USDA, and conventional loans. Property value limits. When it comes to property value limits, local programs generally align with the local housing market. Some programs cap values around $766,550. National programs typically follow similar guidelines, in line with the supported loan types and the program's AMI requirements. Additional requirements. There are a few more things to consider. Most local programs require you to complete a homebuyer education course. This is crucial to ensure that you're well prepared for the responsibilities of home ownership. National programs like the Chenoa Fund also mandate homebuyer education. As for the type of loans, both local and national programs are compatible with FHA, VA, USDA, and conventional loans, giving you plenty of flexibility when choosing the right mortgage product for your needs. To wrap up, here's a quick summary of the down payment assistance programs available. Memphis Down Payment Assistance Programs. The City of Memphis offers a range of down payment assistance program (DPAP) programs through its Division of Housing and Community Development (HCD). These programs provide financial assistance to help cover down payments and closing costs for eligible homebuyers. Assistance amounts can reach up to 10% of the home sales price, not exceeding $25,000. To qualify, homebuyers must meet specific program requirements, which may include income limits, employment criteria, the location of the home within the Memphis city limits, and being a first-time homebuyer. The maximum sales price for the eligible properties is determined by the Department of Housing and Urban Development. The city offers several targeted programs, including those for Memphis Housing Authority residents, Section 8 voucher holders, and first responders like police officers and firefighters. Additionally, the city provides incentives for Memphis Shelby County Schools employees and other citizens purchasing homes in designated areas. Additional DPAP programs are also offered on a national level, such as the National Homebuyers Fund, or NHF Platinum Program, offering up to 5% of the loan amount with nationwide availability. The Chenoa Fund also provides up to 5% of the purchase price with both repayable and forgivable options. These programs offer a wide range of support to make home ownership more accessible by reducing the financial barriers associated with down payments and closing costs. Whether you're exploring a local program in Memphis, Shelby, or Tipton counties, or considering a national option, understanding the eligibility requirements, assistance amounts, and other key details will help you select the program that best suits your needs. At Brighton Bank, we're deeply committed to helping first-time homebuyers achieve their dream of home ownership. We understand that buying a home is one of the most significant financial decisions you'll ever make, and we're here to support you every step of the way. Our bank offers a range of special programs and services designed specifically for first-time homebuyers. We're approved to provide a variety of down payment assistance programs, flexible mortgage options, and personalized financial advice tailored to your unique needs. Our goal is to make the home buying process as smooth and stress-free as possible so you can focus on finding the perfect home. Getting started with us is simple. If you're ready to take the first step toward home ownership, here's what you need to do. First, you can contact us by using the information provided on your screen, whether you prefer a phone call, an email, or even visit us at Brighton office. We're here to help. Once you reach out, we'll set up a consultation with one of our experienced mortgage loan experts. During this consultation, we'll discuss your goals, review your financial situation, and explore the various programs and services that might be right for you. This initial step is crucial in helping us understand your needs and ensuring we can guide you toward the best home buying options available. Our commitment to you doesn't end when you get the keys to your new home. We provide ongoing support and resources to assist you throughout your entire home buying journey and beyond. From the moment you begin working with us, we'll be there to answer your questions, provide valuable insights, and help you navigate any challenges that arise. Whether it's understanding the buying power, preparing you for the home buying process, or planning for the future, our dedicated customer support team is just a call or click away. We believe in building lasting relationships with our clients, and we're here to ensure you feel confident and supported every step of the way. Your success as a homeowner is our priority, and we're honored to be part of your journey. As we come to the end of our webinar, let's take a moment to recap the key points we've covered today. We started by walking through the essential steps to buying a home, from assessing your readiness and setting your budget to getting pre-approved for a mortgage and finding the right property. We also explored the closing process, ensuring you know what to expect when it's time to finalize your purchase. Importantly, we discussed how down payment assistance programs, or DPAPs, can play a crucial role in making homeownership more accessible. We covered the different types of DPAPs available, both locally and nationally, and how they can help reduce your upfront costs by providing financial support for down payments and closing costs. By understanding these steps and leveraging the assistance available to you, you're now equipped with the knowledge to start your home ownership journey. Now that you're equipped with valuable information, I encourage you to take the next step. If you have any questions or would like personalized guidance, please don't hesitate to reach out to us. Our team of mortgage loan experts is ready to assist you in exploring your options and navigating the home buying process. You'll find contact information on your screen along with links to additional resources that can help you as you move forward. Before we close, I want to take a moment to thank you for your participation in today's webinar. We're honored that you chose to spend this time with us, and we hope you found the information helpful as you embark on your journey to home ownership. Your feedback is incredibly important to us. It helps us improve our future webinars and ensures we're providing the content that matters most to you. Once again, thank you for joining us today. We look forward to supporting you on your path to home ownership and hope to see you at our next webinar.